Okay, I'm live for the second night. Look how tired I look. I'm exhausted, but that's okay. I have two more students after this, so I have a hard stop at 9 p.m. my time. So let's see how we do. I have a hard stop at 9 p.m. I have a student at 9 and then one at 9:30 till about 11. So if you have questions, great. If not, I'm just going to ramble for a few minutes. So first of all, let's talk about taxes a little bit because some people have confusion on that. So there are two types of taxes. There are ordinary income and then there's capital gains. Almost everything is ordinary income, everything. Income, interest, dividends, almost all that said is taxed income. And what that means is that let's say you look at your paycheck and you look how much you get, how much you're supposed to get versus how much you receive. That's ordinary income. So like if you're living in the city here and you're a young single person, you're paying like 40% taxes. So that's like you're in this 40% bracket. That means you're bringing home 60%. So that's ordinary income. We don't like that. So now there's also capital gains. Capital gains is pretty much a buy and a sell. So if it's a capital gains, you have a buy and you have a sell. So buy is called cost basis, is what it costs you. Sell is called proceeds of what you received. Cost basis, proceeds. I buy at a cost basis. I sell it for the proceeds. The difference is my gain. So again, if I buy stock at 50 and then I sell it at 60, my cost basis is 50. My proceeds is 60. The difference is my capital gain. Now, if that capital gain happened in a year or less, then it's strictly ordinary income. That's what I'm paying, which is that rate that you pay on your paycheck. But if I happen to be smart enough to hold it for more than a year, okay, just to be more than a year, then it would be a long-term capital gain, and you would pay a much lower rate, like 15 or 20%, which is great. Which means if you make 10 grand, you walk away with 8,500 versus 6,000. So that's most of that's as far as the taxes go. I mean, you don't need much more than that for this exam. But a couple of things. If you have a retirement plan, the money goes in qualified, called pre-tax, and it comes out, you pay tax on everything. Sergio, I'm going to read that in a second. It sounds like you're very happy because you passed. Okay, margin's easy. It's not that hard. The books do a horrible job. And muni bonds, don't go into the weeds. Just get the concepts and what the suitability. Now, but congratulations, Sergio. Even though I said I was going to read it later, I did read it. Okay. Focus. Make sure you get the 7. Okay. Just make sure you get that suitability down and the options. Margin, you're going to get 5 to 6 questions. Munis, it's a lot about suitability. So back to the taxes. So mutual funds. Everything about a mutual fund is taxable. If you get a dividend and reinvest it, it's taxable. If you get a capital gains and reinvest it, it's taxable. If you switch within the same family of funds, yes, you don't pay a sales charge, but you do pay taxes on capital gains because you're technically selling something you bought and then buying a new one. Okay, again, retirement accounts qualified means it's pre-tax, it grows tax deferred, and then when you take it out, at what age, folks? Yes, 59 and a half, you are going to pay ordinary income on the entire amount. No matter how long you have that account. If you have an IRA that you trade the shit out of, it's still ordinary income, not capital gains. Think of it this way. The IRS has been waiting 40 years to tax you. There's no way they're giving you a better rate. So that's one. So non-qualified are like annuities and stuff like that, where you put the money in after you pay taxes. It's called post-tax money. You paid taxes on this money. This 20 grand or 30 grand or 100 grand that you put in has been taxed already. So when you take it out, you only pay tax on the growth. So again, I put in 20, it grows to 100, I turn 59 and a half, I take it out, I pay tax on the 80. Okay. Okay. No, okay, I'll talk about that in a second. So I think we're good with the taxes. It's not much more than that. Let's see if I can add anything. Roth, money goes in after tax, but the magic of magic, no taxes on the way out. No taxes on the way out. Okay, so first of all, Sergio, again, congratulations. Make sure you get the suitability. Margin's not that bad, really. I'm not going to sell this, but if you want to do a lesson, I can fix the margin in probably 15 minutes. Just focus on the basic stuff. Muni bonds is It's, again, don't worry about the little tiny nitty gritty. Make sure you get the suitability. Make sure you know that they are tax-free interest, stuff like that. Okay, Mr. Banks, or Mrs. Banks, it just is B, I'm not sure, I apologize. There's not really an acronyms. There are not really acronyms for suitability. But let's talk about it a little bit. I'm not going to go heavy into it because, again, I'm sabotaging my own business. But suitability, a lot of it has to do with time horizon. Like, I just had a huge fight with my daughter because she's 28 or 29. Yeah, I know how old she is. It's rude that I say that I don't. And she's half treasuries, half munis. Okay, I'm not money market treasuries, which is just like, you're 30 years old, you have 40 years to invest. You shouldn't be doing that. So time horizon is everything. Couple little things. One, if you hear the word capital preservation, protection of money, principal protection, basically, or safety, you know you're going with a treasury. Then you match it out with what they want. If they want income, it can't be a T-bill, can't be a strip because they don't pay income. If it's if they want long term, it's going to be a T-note or T-bond. If they want no income, then it'll be a, they wouldn't say that. If they want inflation protection, you go with tips kind of thing. But again, if you see safety of principal, you're going with treasuries every time. Time horizon is everything. So if I say if they have a long term, you can take more risk. If it's under 5 years, stay away from equity unless there's no choices. Like if they're saying under 5 years, you want to do more money markets and bonds and stuff like that, short-term stuff. Also, you can't buy something. If they need something in 2 years, you cannot buy a 2.5-year product and say, oh, I'll just sell it. It doesn't work that way. If it's longer than the time horizon, it's not acceptable. There's everything in that question. They're very clear on the test. I'm not saying they're easy. I'm saying they're clear. If you buy something, thank you, Sergio. If you buy something, if they're going to come at you, they're going to say, I'm having a flaky amount. They're going to give you what they want, usually what the risk tolerance is, or some version of that. Don't shy away from high yield. High yield bonds don't always mean they're bad. They just mean they're a better return. But pay attention. Read the question once or twice. Income. Income means there has to be a freaking, I almost cursed bigger, a freaking check coming in every quarter, every month, every quarter, every month, every 6 months, every year, something like that. Zeros are not for income. If you see some product that looks like pretty crazy, like an ETN or an ELN or like some kind of packaged product, it's not for the college professor. It's not for the college student. It's not for the retiree. It's for like a 40 or 50-year-old who's looking to diversify, stuff like that. It was a substantial portfolio. Usually someone who has a substantial portfolio can do freaking anything, okay? So again, pay attention to what they want. They will tell you usually some sort of risk tolerance, some sort of time horizon, or some sort of what they want. They usually give you 2 factors. Now, sometimes they say other things, but it's fine. For the most part, they're going to give you enough to make a decision on. But here's the thing that I can't stress enough. Nothing is going to fit perfectly into your boxes. So everyone has these charts, Kaplan, Notman, SDC. They have like a chart and they have a suitability thing. I don't know about AD Banker. I don't know about ExamFX. I don't know about Solomon. But I have a feeling they don't do a good job. Just saying, okay? So if your firm has AD Banker, please convince them to switch to anyone else. Anyone else. Because a lot of these have charts. They go, look, they want income, this is what you do. If they want this, this is what you do. If they want, safety of principal, it's treasuries. If they want just to park their money, parking your money means very short term, like money markets and stuff like that. So suitability is a lot out there, but it's going to be, a lot of it is going to be, oh my God, it doesn't fit perfectly. Find the best. You may think they all suck. Find the best of the 4. If you see one that looks better than the rest, freaking pick it and move on. Don't sit there and jerk around and be like, oh, I'm not sure. Just pick an answer and go. And maybe if you're really like between 2, then mark for review. But don't sit there and vacillate, oh my God, it doesn't fit. Because again, everyone I talked to, my other students said the best tip I gave her is you're gonna feel like you're failing the whole time. The test is written that way. because they ask you a square peg question and they give you a bunch of triangles and rectangles that don't always fit. So please just make sure that you are confident enough that if you go in there and you go, oh, I'm pretty sure the answer, if you're pretty sure something's an answer, that is the answer. Okay? If you're pretty sure something is the answer, it is definitely the answer. But you're not going to feel that way. You're going to sit there and go, oh, I'm not sure. And then you're going to doubt yourself, and then you're going to quit. Again, girl today said the same thing. The best thing I told her, other than all the gold that I'm dropping, is that she felt like she was failing, and she said, I'm just going to power through. That's 2 times on a test she felt like she was failing, and she powered through and ended up passing. She was like, I have no business passing this exam. Because they write it that way. It's not like you don't have the knowledge. It's just that you have to just understand. You're welcome. Just understand that they're not making it easy on you. But the good thing is, the questions are straightforward. You will know what they're asking. You just may not know what the answers are. Doesn't help a lot. Okay. Does anybody have any questions? I think I did a lot of the suitability. I have a lot of people taking the 63 and the 66 now because it's the fall. Summer's usually SIE and top off. Fall and winter is a 63, 66, and then it just starts all over again. Okay. Okay. Let's see. So for the balance sheet stuff, I don't know about any memory tricks. And again, I'm trying not to do too much in the top off, but I did say I would, so I'm happy tonight doing this. So the balance sheet, remember something. Here's the thing you have to remember. Balance sheet is for assets and liabilities. It's for things, okay? Income statements are for cash flow, money going in and out. So profit margin would be on the income statement. Dividends payable. Basically, so assets are like, there's current assets and total assets. So income statement is all about money going in and out. So if they have expenses, that's on the income statement. But if they have an asset or they owe bonds, it's a liability. Also, total net worth is assets minus liabilities, also known as shareholders' equity. Working capital is current assets, which are due in a year or less, and current liabilities, which we owe in a year or less. They're not always the same numbers. A lot of times they aren't. Everything in total is in current. I mean, everything that's in current will be in total, but everything in current is not in total, because total is everything. Current is just within the year. So total net worth or stockholders' equity is assets, total assets minus total liabilities. Working capital is current assets minus current liabilities. Now I'm going to give you one tip that everyone gets on the test. If you declare a dividend, your company, your total net worth and your working capital both go down, because net worth is always assets minus liabilities. So if you have assets of $1 million and no liabilities, and then you declare a dividend, you now owe that money. So boom, your liabilities go up. Okay? Okay. Now, okay. If assets over liabilities, so basically your liabilities go up, so your assets, so your basically net worth goes down. Now, when you pay the dividend, you don't owe the liability anymore because you paid it, but your assets go down because you're through cash. So declaring a dividend lowers your net worth or working capital. Okay. Now, if they pay, once they pay the dividend, your net worth or working capital doesn't change because the assets and the liabilities drop at the same amount. Okay, I hope that helps a little bit. I mean, they're not going to kill you on this stuff. Learn the current ratio, which is assets divided by current assets divided by current liabilities. But the balance sheet stuff isn't going to kill you, but that's a lot of the stuff they're going to do. Okay, this isn't related to any questions. Yes, but I remember the order of orders, the priority of orders. Okay, so, right, so pretty girls drive Mercedes. So basically what they're saying is that if we do a municipal offering, and then the order of basically the order of not payment, but I guess the order of orders is priority of orders. That's the word. I couldn't think of it. That's what happens when you turn 52. Jesus Christ. Okay. Wait a minute, 52 or 51? I can't remember anymore. So now, so Priority of orders that if a muni bond is during the muni bond issuing time, there's a point where they've gotten all the bids, but they haven't chosen an issue the underwriter yet. So you can actually, as you're doing munis or GOs, you can actually accept orders prior to them choosing you. Those orders are pre-sale. They always get first priority. Any orders I receive as an underwriter after I've been chosen as the lead underwriter are group orders. They're second priority. Anything where one of my underwriters doesn't want to share the commissions with the other underwriters, that's called designated. The group is when member of my syndicate, like group or FINRA members, want to buy some of these bonds, they come last. So it is pretty girls drive Mercedes, pre-sale, group, designated member. Another acronym it made me think of is MISPERMS. MISPERMS I might have done already, but that's the Act of 34. I'm going to go through it quick. You can always pause and re-listen. So MISPERMS is margin. These are anything. MISPERMS is Act of 34. Act of 33 is primary market, syndicate, IPOs. Act of 34 is margin, insiders. Remember, margin is covered by Reg T. That's the Federal Reserve Board. Margin, insiders, who an insider is, and the penalties. S is the SEC. The other S is short sale rules. These are all, you have to get a borrow, you have to pay for it within a certain amount of time, all that stuff. P is proxy, that's voting by mail. E are the exchanges, and the broker-dealers had to register with the SEC. That could always come up. R are reports. Those are the issuers have to file 10Qs, 10Ks every quarter, every year. 10Q is quarterly, Q for quarterly, 10K for annual. M is manipulation. Those are all the fun things that I read about. You know, wash trades and marking the open, marking the close, phishing and spoofing and all that fun stuff. Into anything that manipulates the market. And then the last S is stabilization, which is when an underwriter brings a company public, they will buy shares at a certain price to hold at the IPO price or less to hold it up there. There are a lot of rules with that. They can't push it up, but they go. Okay. Okay, so formulas or calculations. Okay. So I'm going to go through some of them. The problem is not a hard or fast rule, because I could say these, think it's a probability game, right? Okay. So it's a probability game. So here's what happens. So the way I go with this one, you probably need to know that for SIE, just worry about current yield and how to do stock splits. For the top off, it should be, you should know current yield. You should know convertibles. You should know the option stuff. You should know the margin stuff. You should know some of the balance sheet stuff. Don't go crazy. Know current yield. You know the current asset. Know the net worth. Know the working capital. Know PE ratio, which is market price over the earnings per share. Know how to get earnings per share, which is the total, basically all the earnings minus the preferred over the outstanding shares. You should know how to do tax equivalent yield, which is basically, if it's a corporate, you multiply the coupon times 100 minus the tax bracket. If it's a muni, you divide. I'm not going to go into these. You just got to look them up and try to figure them out, and we can always work on them another time. You need to know the convertible, I said. You need to know, probably you might need to know how to get S sales charge. Okay. And I think that runs into most of the formulas. I'm trying to think, is there another one? All the option stuff, you know, break evens, max gain, max loss, stuff like that. And I know there's one that I'm missing that I can't remember. Oh no, convertible, that was it. Okay, I'm gonna go with that. That's most of it. Okay. The bar, pass SEC, use SEC derivation, taking Series 6 in a week, decided to stay with SEC. And okay. So, okay, and then Caitlin, you're saying you take the S. Okay, third time soon. You're going to setting for about 7 hours per day. What is it? Okay. So I'm going to do two things. I'm going to cover this in two spots. One, 7 hours a day is going to freaking kill you. So there's no study total. It should be, but what I'm going to tell you right now, you should be, right now, if you're taking it soon, both of you, you should be reading half, testing half. So take a test and then find the lowest chapters and then read those chapters or look them up. Like if you know that you're bad in mutual fund, you know, taxation, read that section and then take another quiz on it and then take another final. I'm not a big fan of over testing, but I do know that It helps if it's a learning tool, like it's teaching you how to find the weakness and then work on it. So a couple of things. Make sure you know communications. There's definitely going to be communications on this. Like, what's a retail? Retail is over 25 retail investors. That is to be pre-approved. Under 25 is correspondence, and if it's only to institutions, it's institutional, which doesn't need pre-approval. I would make one, it sounds so stupid, get a lot of sleep. Every freaking night, do not stay up all night studying. Caitlin, if you're studying only after work, 7 hours is way too much. If you're studying during the day, make sure you take breaks. Do 2 hours, take a break. Do 2 hours, take a break. Do 2 hours, take a break. I don't even like 6 hours that much, but if you're going to be there all the day, it's fine. I would spend, if you're taking it, say, and then more than 2 weeks away, I would read the book one more time. If you can use STC, I would do that. Or even, I guess Kaplan's okay, but don't use the 80 Banker Solomon's Exam FX. I just hate them, and I don't know anything about them. And watch, I'm sure that they have a rifle set on me now, but opaque open window, they could. But go with the main ones, the Notmans, the Kaplans. Achievable is not there yet. They only have the SIE. Kaplan, Past Perfect, STC, Notman. Past Perfect goes a little deeper into the math than you need to, and I don't know that the 6 has a ton of math, but you got to know the suitability. Like, I watched it earlier in the test when I talked about suitability. And when you talk about inflation protection, you have to know that it's common stock. So common stock is the best inflation fighting tool. So you want to buy equity mutual funds, stuff like that. Make sure that you're focusing more on the learning than about getting the test right. If you're starting to memorize answers, that's the thing. If you're starting to memorize answers, I need you to buy somebody else's questions. I don't care who, but if you're taking tests and you go, oh, that's 82, that's B, that's C. Don't fool yourself into saying, oh, I know the concept, so I'm fine. You don't. I've had a lot of students who come in and they go, I've taken the SEC 3 times, and I even though I know the answers, I know the concept. They don't. They think they do, and then I ask them, and then they can't explain it. But they just know that like if I go back and forth with them, they go, wait, give me some choices. No. If you can't explain it to me in person, like as a normal conversation, then you don't understand it. And here's another tip I say. So all of you probably have lost friends while you're studying. So this is what I do. If you have a boyfriend or girlfriend or a mom or dad or whatever it is, give them a paper quiz. They can have the answers, but you have them read the question to you. You try to answer it without seeing the answers first and see if you can explain and see if that works. So this is what I did with my wife when I first started not teaching, but studying. I was like 20 years old. I would give her the questions. She would ask me a question, and I would have to answer it in a way that she could understand it. That's huge. It's amazing. That actually started getting me on the teaching gig 10, 15 years later. But what happened was I learned that I had to be able to explain it in a way that someone who didn't know this stuff. Like I say, she was ignorant. She's not stupid. She didn't know the business. She was 20 years old. So, but since I had to explain it to where she could understand it, where the answer worked, it changed the way I was thinking about stuff. And that's amazing. When you have to try to teach the things, it really, really, really makes a difference on how you learn. So that's my biggest tip is find someone, boyfriend, girlfriend, whatever it is, and have them hold the test and read it to you. Such quality time. But what is that it gives you time together that I know a lot of people. I mean, I've had 3 students already where their boyfriend or girlfriend broke up with them like the week before the test. So 1, that's heartbreaking, but 2, I call that a gift from God. Because if that person is so narcissistic that they can't wait a week to break up with you because they have to do it and they know what you're going through, that is not someone you want in your life. I'm not trying to give Zen life advice, but I'm just saying, if this happens, if you lose friends because of this, it's a gift. Okay? Okay, so now, let's do this. I do have to go because I got my student in 4 minutes. I'm going to set a book. I'm going to try to do every Tuesday. I mean, tonight's Tuesday. I'm going to put in my calendar 8:30 every Tuesday. I try to do a half hour and see what we can do. If I can do more, I can. But until I get paid for it, not from you guys, obviously, but until I can start getting paid for it and get over 1,000 subscribers, then it does cost me money to do this, which I'm happy to do. Okay. Oh, hey, thank you. I knew there was one. Accrued interest and accretion. Accrued interest and accretion will be on the 7th. You got to know accrued interest, not the super. You don't have to figure out the amount, the dollar amount. You may have to figure out the days. You have to know that treasuries are actual days, T+1. You're welcome, Caitlin. I hope it helped. You have to know that treasuries are actual days, T+1. And you have to know that corporates and munis are 3360 days, T+2. And then you'll have to figure it out from there. And know that the data date is the first day it starts accruing interest when it's first issued. So after the first payment, it's a moot thing. It doesn't matter. Accretion and amortization you have to know too. Not crazy stuff, but basically just know. Most of the time you just have to know whether they have to or not, or do the math. So let's say you have a bond, 10-year bond, trading at $900. You're going to do $100, which is a discount, divided by 10. That gives you, what's 100 divided by 10? It's $10. So every year it's going to be $10 a year accretion. And that increases your cost basis. Amortization is the same thing, but it reduces your cost basis. Okay, I do have to go because I have to get a soda before I do this. Thank you very much. Please, if you're still on, like, subscribe, hit the little note thing, and tell other people, share it with people. Tell them I'm helping you because I like doing this. I will talk to you later. You're all great, and I will talk to you. Have a good night.